ETH in crisis mode with a $4 billion exit traffic jam, while Bitcoin drops below 116K in a brutal $448 million liquidation cascade. But somehow exchange tokens are exploding up 18% during this exact same market. What is happening? I'm Alex from Moonward Capital, and this is your Crypto Pulse 6-minute flash update. Hey, crypto crew, if you're just waking up, you might want to brace yourself. We're seeing absolute chaos across the markets right now. Let's dive straight into what's happening. Monday has delivered a brutal reality check with Bitcoin crashing to 107 down 2.73%, while Ethereum is taking an even bigger hit, plunging nearly 6% to 4,293. What's driving this? Over $448 million in leveraged longs have been completely wiped out in the last 24 hours. Let me break down our major assets. Bitcoin down 2.73% at 115 and 107. Ethereum down a painful 0.77% at 4,293. XRP down 4.21% at 299. Solana showing weakness at 181.79, down 6.39%. And BNB holding slightly better at 837.76, down just 2.45%. But here's where things get truly interesting. Ethereum is facing what might be its most significant crisis since the merge. We're seeing an unprecedented 900,000 ETH, that's $4 billion, stuck in validator exit queues. This has created the longest withdrawal delays in the network's proof-of-stake history. We're talking 15 to 40 days to get your ETH back if you unstake right now. This mass unstaking event is creating a perfect storm that threatens to flood markets with even more selling pressure. ETH is already trading at a discount, which could potentially trigger cascading liquidations throughout DeFi. But it's not all doom and gloom. In fact, some sectors are showing remarkable strength. CEX platforms are defying gravity with an incredible 18.77% surge. Oracle's up 1.46% with Chainlink continuing its momentum. Stablecoins gaining 4.14% as we see a clear flight to safety. LRT tokens up 4.20% with liquid restaking, gaining traction. Meanwhile, the NFT ecosystem is struggling badly, down 7.64% as speculative capital exits rapidly. Let's zoom in on the most fascinating development today. While majors are cratering, exchange tokens are surging by nearly 19%. What's driving this? OKB and BNB are demonstrating that revenue-backed buybacks create the strongest value accrual in crypto. These quarterly burn mechanisms are maintaining scarcity premiums even during extreme market stress. When platforms earn real revenue and use it to systematically reduce their token supply, they're creating a deflationary pressure that seems to withstand even the most brutal market conditions. Another bright spot? The liquid restaking token sector is up 4.2%, showing that institutional capital is rotating toward yield-bearing infrastructure plays. We're seeing a clear narrative shift from pure speculation to sustainable returns, and this is accelerating amid the broader market volatility. This could be one of the most important developments to track moving forward, especially with Ethereum's staking crisis unfolding. So what does all this mean for your strategy? With $448 million in longs liquidated while CEX tokens surge nearly 19%, are we witnessing market evolution where sustainable tokenomics beat pure speculation? Is Ethereum's 900K exit queue the canary in the coal mine for a broader institutional retreat? Or will this ultimately strengthen the network long-term? Here's what you need to do. First, monitor ETH's ability to absorb $4 billion in potential selling pressure, as this historic exit queue creates unprecedented supply dynamics. Second, track CEX token resilience as their deflationary mechanisms prove their worth during market stress. Remember, sometimes the strongest narratives emerge from maximum pain, and today's liquidation cascade is revealing which assets have real economic moats versus pure speculation. That's your Crypto Pulse Flash update for Monday, August 18th, 2025. I'm Alex from Moonward Capital, helping you stay ahead of the crowd. If you found this valuable, hit that subscribe button and notification bell to catch our next update in 12 hours. Until then, protect your capital and watch those exit queues.